Welcome to Coffee and Crypto with Lee and Jimmie. I am Lee Reiners, joined as always by Jimmie Lands. Jimmie, we survived another digital assets at Duke.
I would say we survived and thrived. I would say we survived
You're not
and
feeling
thrived.
beat up? You're not feeling tired? Or
I was exhausted.
Yeah,
I was freaking exhausted after that. Are you kidding?
Dude.
But it was, it was biggest one we've ever had. 300 people there. And people were there till the very last minute of the last session.
The last session was full. The room was full. Absolutely.
It was a full house, man. It was a lot of fun. I was really disappointed that the second annual Digital Assets Crypto Classic was canceled, but that's what we're calling it now. The Crypto Classic was canceled, but otherwise, it was just, we knocked it out of the park. It was fantastic. I think the interview with Bo Hines was great. That people loved hearing the questions. The fact that he opened it up to questions from the audience was great. Some robust discussion took place. I'll put it that way.
Yeah, man, it was great. It was really great. There's so many people that we have to thank. First, people who came. I mean, we could put the best conference in the world together with the best speakers and whatnot, but it wouldn't matter if no one came.
Right.
Right. So for all of those who came, we really appreciate it. Jimmie, I'm sure you heard from a lot of folks too who are like, "Oh, I love the podcast and listen to the podcast," and I feel like that's added some pressure here. It's like because previously, like I was just like, the way I've always viewed this is just like you and I just chewing the fat like we would anyway. Right. But now it's like, oh man, like I have like these visions of listeners in my head. I'm like, oh, we actually have listeners. Not that I didn't realize that, but it's sort of up. It's added some additional pressure. So hopefully we deliver for folks. But we appreciate you listening and obviously coming to the conference. All of our sponsors,
knocked it out of the park. Sponsors were fantastic.
Yeah.
They were. Not only were they writing checks, but they were super engaged in like everything we did.
Mm-hmm.
I mean, they were helping us out with speakers. They were helping us out with logistics. I mean, the sponsors were fantastic. I mean, they always
obviously GTCC and Fidelity first and foremost. Thank you. This is not something that is a profit. We don't do this for profit. We don't make money off of this.
No.
Right. And Duke isn't giving us any discounts either. I mean, we have to pay for the venue.
Full boat.
Right. Yeah, exactly. So we actually could not do the conference without the sponsors.
No.
So for all of those who sponsored, we're just incredibly grateful. And then our speakers. I mean, what makes the conference so great at the end of the day is the people on the stage, Jimmie.
I mean, everybody was open. They were open to questions. We had nobody that said, "Oh, I'm only going to take certain kinds of questions" or anything like that. Everybody was very frank and honest. The speakers were fantastic all the way around. The other thing that, we always want this, but this year it was off the charts. The number of students from other universities. I mean, we had students from universities all over the U.S. coming in for this, which was incredible. I mean, they add a lot to it. Obviously they're all studying, they're academics. They add a different flavor to it. I think the speakers and the attendees loved engaging with these students from all over the place.
Yeah, for sure. I mean, we had, the Elon, we've always had a steady Elon contingent and we love that. Ohio State, obviously some Duke students. So it's not, for those who haven't been, it's not primarily a student audience, but we do have some students there and we do limit, we cap, how many students can come. So it's not sort of like viewed as like a student exclusive type of deal. But that means that the students who do come really care about the subject matter. A lot of them, of course, are from your program. So these are, students who are pretty familiar already with digital assets. Okay. And they just, and I really appreciate all of our attendees who took time to speak to the students, right? While there, and hopefully people appreciated that, that opportunity, because just a great opportunity for students. So just awesome, Jimmie, all around. Kudos to you. We say it every year, but we couldn't do any of this without Nikki Bass, right?
Nikki is great.
Keeps the trains running on time, of course. So with that said, Jimmie, is any sort of highlights in terms of the panels or speakers, anything that sort of stuck with you or or you've been sort of noodling on over the past week?
You know, there are. I think there are a couple of things, Lee. I mean, the panels, honestly, and this isn't just blowing smoke. The panels that you did were off the charts. I mean,
well, as to you, my friend.
I mean, they were really good. I think, you know, we talked about it at the very beginning. One theme that came up at almost every panel was tokenization. I mean, we had a couple of tokenization panels. We had one on native tokens. We had one on I mean, but almost every panel came up with tokenization. I mean, everybody was talking about it in different, you know, kind of different contexts. And I mean, I think we're going to see this take off this year. And I don't know where. I'm not sure exactly how. I mean,
we got some stories today. When we get to our stories today, we'll get into it a little bit. But yeah,
we will. I mean, that was the one theme I think that just came through time and time again. How about you, Lee? I mean, what did you think?
Well, you know, what's interesting, Jimmie, is I don't know if this is good or bad timing on our part, right? But you know, the first full day of the conference last Thursday, the crypto market tanked. Right? I mean, it was a bloodbath. And what struck me is people weren't really talking about it. Like certainly on stage, it wasn't coming up. I mean, on the sidelines and sort of one-on-one, some folks would kind of mention it, but you know, it didn't really change the substance or the tenor or the excitement at all. And I just kind of thought that was a perfect encapsulation of what the conference is all about, right? Is that this has always been, you know, we built this to be forward looking, right? As we always say, like this was a conference for the builders. And you know, people in this for the long haul, right? Not to, you know, pump tokens or whatever it may be. And you know, I just thought, wow, you know, the Bitcoin, you know, and cryptos, you know, went down by, you know, like I think it was, you know, 67 to 60 in a day or something like that. And it didn't really change anything, you know.
No, you're right. And there wasn't much of a mention. I don't think anybody said anything from the stage about it. You're 100% correct. You know, people are in it for the long haul. And so, and in particular, you know, given the people who are there, I mean, we had people there from crypto exchanges and things like that. We had investors there. We had institutional investors there. Nobody really said much about it. And so, you know, it kind of goes back. I mean, I don't know if you remember one of the very first papers that I wrote, and this is, you know, years ago with Alessio Barini, was around the resilience of crypto investors, how much different they behaved than investors in like the stock market, for instance. When prices go down, people don't run away. They actually pile in. And I mean, I don't know how many people I heard saying, "Wow, if it gets to 60,000, I'm in. I'm all in." I mean, you know, time and time again. And so I think this is, and that's, you know, just kind of to me shows that, you know, this is a different kind of marketplace. This is a little bit different kind of investor maybe. And people have longer term outlook than.
Well, it's a seasoned marketplace at this point too. I mean, you know, everyone who was there by and large, certainly on the stage, you know, we've been in this space for a while now. I mean, you know, this is 2009, right? It was the first January 2009 was the first Bitcoin block. So, you know, this has been around. So like folks have seen this movie before. And so like no one is, you know, like no one's panicking, you know, look, I have no idea where the price is going to go, how low it's going to go, you know, how long it'll take to get there. I don't think anyone does, frankly. But we've just seen this volatility before. And so there's just no sense of like panic. I mean, obviously, like I'm not, you know, I'm a crypto skeptic and I'm not exposed financially. So it doesn't really impact me personally. But I think even for those who are and were at the conference, you know, we've seen this movie before. You know, and
I agree with you.
And this is again building for the long haul.
The one thing that was called out, and I know you and I were talking about it just a few minutes ago, that we are, while we saw crypto prices decline, what we are seeing is people continue to pile into stablecoins. There were two articles that came out today, one in the FT by Jillian Tett and one in the Wall Street Journal, who I'm not sure who wrote that one.
Teles Demos. Okay. I hope I'm getting that right. Yeah.
And I mean, Jillian was highlighting Jillian, like I know her.
She's pretty well known. I mean, a lot of people know of her. She might not know us.
But Jillian Tett, you know, raised the fact that stablecoins have gotten so big and so popular that the top two issuers, Circle and Tether, now are the fifth largest buyer of U.S. Treasuries. They are They are bigger than China as far as buyers of U.S. Treasuries. I mean, that's significant. I mean, we're talking, some major, and, I don't know if you remember, gosh, it's got to be like probably 6 months ago, 8 months ago, Scott Bessent came out and said, he saw, and this is on the back of a BIS report, the stable coins going to like $3 trillion. And people were like, no way. Now people are saying, hey, maybe that's realistic. It does have an impact on banks. Absolutely. I mean, they are, these deposits will be going someplace else. I don't think they're coming out of money market funds. Maybe some are, but I think a lot of these are probably coming out of deposits. So she highlighted the impact on banks and how banks need to kind of, think things through. But it was a really interesting piece.
Yeah, it's and obviously we had a great stablecoin panel here,
Yes.
and part of the theme of that panel was like, where is this all heading, right? I mean, every week on this show, Jimmie, how many new stablecoin product launches do we cover, right? I mean, we could literally do a nothing but new stablecoin projects, at least announcements. And I think that's part of the issue, is that at this point, a lot of these are just that, announcements.
Announcements,
right?
yeah.
And we're waiting to see, what does this actually look like in practice? Can the market end up, supporting dozens of different stablecoins? I think the consensus from the panel was probably not, but you could have sort of a whitelisting dynamic, right? Almost like, when, you remember the old Macy's card, like you could just use it within Macy's, right? You could have a situation like that where it's like, okay, you can, the Amazon stablecoin you can use, exclusively at Amazon or something like that. And maybe you get a discount or whatever. So we're all trying to figure out where this is heading. And the article from the Journal from Teles Demos was really sort of looking at the relationship between stablecoins, US dollar stablecoins, and Bitcoin and sort of crypto writ large. Because obviously to date, Jimmie, right, the stablecoin primary use case has been speculating in crypto markets, right?
Yeah.
And of course, people are looking ahead and saying, well, look, the whole point of Genius was to make these payment instruments, right? Viable payment instruments. We are seeing some momentum there in foreign countries, right? Certainly countries that have, unstable governments, hyperinflation, right? And some uptick there. But the market cap has come down a little bit. So we're for stable coins, right? So, and obviously we talked about already, crypto prices are depressed and falling. And so if stablecoin market cap goes down with crypto prices, then obviously that's supporting the sort of original thesis, which is stablecoins are the casino chips at the casino here, right? So it's something to keep an eye on here.
It's something to keep an eye on, for sure.
Will we see sort of a stablecoin decoupling from like the broader crypto market, in which case that vision of a payment instrument would be fulfilled? So not there yet. And I think that was really the whole point of the conference, Jimmie, was like trying to sort of get a sense of where is this all heading, right? Especially on the tokenization piece, which is like, look, we're all kind of expecting tokenization to be a significant game changer, but like we haven't seen the killer. Like even when you look at like BUIDL, and we'll talk about BUIDL later, like the outstandings is relatively small compared to, right? So where is this heading? Is this going to be a big thing, or is this going to be like a, hey, kind of fun to play around on the on-chain type of thing?
I don't think so. I think we're seeing some of the apps, some of the use cases for tokenization that I see that are, I think are here to stay and that have real legs are a company I've mentioned before, Provenance. They're tokenizing mortgages and HELOCs. They're securitizing these, and they're selling them to institutional investors, just like you would mortgages in mortgages in other markets. But they've taken a lot of cost out of it. They've taken about 117 basis points of cost out of it, and they're doing billions of dollars a month in these things. I think those are the kinds of applications that have legs. Those are the kind of applications, some of this stuff is pie in the sky, and you and I both see it, and we're like, what, really?
I thought, Olivier from on your panel, you did a great job moderating too, by the way.
Thank you.
And I really enjoyed on Friday, your panel on tokenization with Jason from Fidelity and Charles from SIFMA and Olivier from the CFA Institute. And, kind of Olivier was saying like, oh, okay, well, tokenizing art, like, this token represents like this corner of the Van Gogh or something like
Right.
that,
Yeah.
and sort of there's a lot of like, ownership, right? Legal rights. So there's some issues to be worked through, and I think that gets to your point where it's like tokenization. We're not going to tokenize everything,
No.
right? Or there's not a use case for putting everything on
There's just
chain.
not a practical use case for a lot of it.
Yeah,
Yeah.
but for some, there certainly is, right?
Yeah. Yeah.
So
I absolutely
yeah,
think so. And so, and let's face it, most things that, get adoption and that come into existence have two things in common. One, they make life easier, and two, they make things cheaper, or more efficient. And sometimes the easier will win out over the efficiency thing, right? People will pay for convenience. And so,
yeah, absolutely.
I think that's what we look at. That's why I think that, things that are, not brand new, improvements on things that already exist are probably most likely to succeed in
Yeah,
at least initially.
yeah. Agree with that. So, another session that stood out to me was the DAT session. I don't know if you were there in the audience for that one, the digital asset treasury companies, because
Yeah,
you and I over the years have been pretty critical.
we we have thrown
And
some rocks.
and my opinion hasn't changed, but I will say that and not surprising because this is their jobs and what they do. But they were definitely an articulate advocate for the business model.
Yeah,
Now I still don't buy it. I mean, the whole premise is that, let's say it's a Bitcoin DAT, and because we had an XRP DAT, Jessica, Evernorth, I think is the name of that company. But Ben Workman from Strive and Catherine Dowling,
yeah,
from Bitcoin Standard Treasury Company, I think. Those are Bitcoin DATs, and of course, the whole premise is that Bitcoin is going to go up, to the right, sort of indefinitely. I don't see that happening. Strategy's under a lot of pressure right now. I mean, every time I listen to Michael Saylor, I just feel like he's increasingly disconnected from reality. But they made some good points, right?
yeah.
But I just, these sort of balance sheet companies, I mean, I don't know if you've ever invested in balance sheet companies. I
No,
mean, we're kind of old school. Earnings, cash flow, discounted cash flow is sort of where we're looking here, not just expecting an increase in the value of the assets. So we're kind of all sort of waiting for bated breath for kind of the first stat to fail. It hasn't happened yet, and
no.
these folks were quite confident. And not that they didn't say none of them would fail, but I think they said, look, not all these stats are the same thing, or
That's
and
I think that's a
yeah,
really good point. They're not all the same thing. You can't. I don't think you can throw them all under kind of that heading,
yeah.
because they are different.
And it's a capital structure, I think Ben was saying like Strive, there's no debt there with their debt, it's all equity funded and whatnot.
Right.
So, yeah, I thought it was interesting. I'm really glad that they came, and I was kind of skeptical of sort of having that subject there because you and I have been so dismissive, but
Yeah.
it was we thought like, look, this is something that's going on. It's relevant. People are talking about it.
We
We
got
should
some
have
great
it.
questions,
We
some
should have it
challenging
we
questions.
should have it at the conference,
Yeah.
and I'm glad we did. So again, thanks to all of our speakers, and just well done to you, Jimmie. Another digital assets at Duke in the books. All right, so you ready to move on? We got a lot of stories today.
We
We're
have
probably not
a
going to get through
lot
them
of stuff
all.
this morning. Yeah,
You
there's a
know,
lot of stuff going on this morning.
so back to the prices, right? We all
Yeah.
know crypto prices are down. And the old famous Warren Buffett quip, right? When the tide goes out, you see who's swimming naked.
Yep.
And we're kind of waiting, right? We got our binoculars. We're seeing whose trunks came off there in the water. And so we have one firm, BlockFill. Jimmie,
BlockFills.
okay,
Yeah.
BlockFills, a company I had not heard of prior to recent events, but they are a institutional trading and lending platform.
Right.
They actually have some pretty big name investors, including
Absolutely. Yeah.
Susquehanna, the market maker, and CME Ventures. They handled roughly $60 billion in trading volume last year.
Yeah.
So they have paused client deposits and withdrawals for the time being. Okay.
Yeah.
And the question, Jimmie, is this canary in a coal mine? Because it always starts with, I remember back to, Celsius and others, right? Always,
Yeah.
you pause withdrawals. The first step, pause withdrawals. Okay. And then next step is bankruptcy. Sorry, folks.
Yeah.
Now I'm not predicting that here
Yeah.
with BlockFills, but this is kind of the first, kind of issue we've seen. We haven't seen, with the prices. I think that's what people are struggling with right now, which is like, well, what's the catalyst? Because when we go back to the previous crypto winter, 2022, Jimmie, right, it was very clearly Terra Luna collapsed that May, which was sort of the kind of the first domino
It was big,
to fall. We're kind of looking around like, where was that domino? Who was the kind of, how did this all start? We can kind of go back to 1010. I mean, there's some culprits out there.
Right.
But we don't have a clear story in terms of why are prices down so much. But if they continue to go down, we're going to see more BlockFills, Jimmie.
So,
I guarantee you that much.
I think so. In traditional finance, folks, we see the same thing. Hedge funds. Hedge funds will freeze redemptions. One of the reasons that hedge funds have moved to this quarterly redemption mode is to keep this kind of thing from happening. I think this is a lending platform. There's collateral involved and things like that, as well as a trading platform. So you have it kind of from both sides. They're leveraged from both sides.
Yeah.
So it's not surprising that something like this could happen to. The other thing about crypto that some people don't recognize is the way that margin calls are made are dynamic, right? I mean, you can be sold out, during the day. If your collateral moves to a certain level, they will liquidate you. I mean,
automatically.
They are not going to lose money. They will. There are forced liquidations, automatic. They're not forced. They're automatic liquidations, and so it does operate. I think that's a better way to do things, probably. But at the end of the day, this is everybody knows this can happen. Nobody thinks that it will, but it always does. And so, is this the first canary in the coal mine? I don't know. I don't think there are that. I mean, institutions certainly. I don't think there are that many people that are invested, as far as absolute numbers of people invested in those kinds of companies. And so I would say probably not. Terra Luna was a little bit different story because it did have really, really widespread, holders. This is not that kind of case. This is, I think, more limited. And so while there can be some forced liquidations and things like that, I don't think it's going to have the same kind of broad, in particular, retail impact as a Terra Luna type of situation.
Well, I certainly hope so. The reality is we don't know. Despite the crypto industry's claims that, the blockchain is so transparent, a lot of the stuff is not happening on the blockchain, right?
Yeah.
And because it's not regulated, we don't have transparency into, interconnections. And that was the issue with Terra Luna, right? It was Terra Luna, then it was Three Arrows Capital, right? Voyager, BlockFi. I mean, it just sort of trickled down, and we're like, some of these firms, we were kind of hearing about for the first time, like, wait, who are they? Like Three Arrows Capital. I mean, look, if you're in crypto, if you're a diehard, degen, like you probably knew about these firms, right? Certainly policymakers didn't. And we all kind of learned the hard way. And so, what kind of interconnections are out there now that we're not seeing, that will be revealed in time if prices continue to go down and, we see more firms like BlockFills get into trouble. So we will watch. So speaking of getting into trouble, Jimmie, you sent me an interesting analysis from S&P over a new securitization vehicle, actually, from Ledin, right? Ledin Issuer Trust. And
what do you think about that?
Well, so you sent me this very technical S&P kind of assessment here. But basically what they are doing, and I'll let you kind of talk about why you thought it was interesting, is they are securitizing Bitcoin-backed loans. Right. So these are dollar-denominated loans. I mean, fiat currency loans, is my understanding, that are secured, right, by Bitcoin.
Yeah.
Okay. So as of the end of 2025, the initial loans have an outstanding principal of $199 million, secured by Bitcoin with a fair market value of $357 million, roughly.
Right.
So, significantly over collateralized. What's interesting reading it, and I think I might have saw like a news story about it. Maybe Matt Levine wrote about it. I'm not sure. Is that some of these loans have been, to your point earlier, right, automatically liquidated because they dropped below the loan to value threshold, which I think was 80%.
Yeah, 80%.
Yeah. So So to the extent that, that it approaches that 80%, you automatically, your Bitcoin gets sold, right?
Mhm.
So yeah, Jimmy, why did you, I mean, interesting concept. Anything, these were all balloon loans, I believe, right?
Yeah,
So
these
it's
are
just
fixed rate balloon loans.
fixed rate balloon loans. Look, financial markets, I think you said at the conference, great line, which is they're only bounded by human imagination,
Yep.
right? So anything with cash flows can be securitized, including, Bitcoin backed loans. And so finance is going to do what finance does here. But why did you think this was interesting?
Well, I mean, obviously, backing it with Bitcoin, I thought was an interesting perspective. The other thing was the kind of the firm that led this, the lead manager on it was Jeffries,
Yeah.
which
They
old
kind of been in
employer
the
of
news
mine. I'll
a
put
little
that
bit lately
caveat out
here.
there.
Yeah.
But
Yeah.
I thought, for a very traditional firm doing something like this, the idea that there were, I don't know, 5,000 or 5,500 fixed rate balloon loans that were, those were, that's kind of normal, right? We have
Yeah.
all kinds of different, assets out there that people invest in for different reasons, things like that. But the interesting thing to me was the Bitcoin side of it was that people were thinking about it in those kinds of terms. And so, as you said, it's way over collateralized, almost by 2 times over
Hmm.
collateralized. But I did think that it was really interesting that people are starting to think about things this way, think about assets and money this
Yeah.
way. That if I want to do this deal, and I mean, hey, at the end of the day, these managers only get paid if the deal is done. But that they could, use this alternative funding mechanism to do this, I thought was really interesting. That
Yeah.
that a very traditional firm, this isn't like some place you never heard of before, is doing this, and that it was taken up.
Yeah. It's so interesting because I feel like over the last couple of years, so much of the product innovation in crypto is really just about providing liquidity to OG sort of Bitcoin or crypto holders
Right.
without, triggering a tax obligation, right? Like, I think honestly that's a big part of DATs, which is like where do the DATs get the crypto from? I think there are large whales who are exchanging their crypto for DAT shares. Now that we have in-kind creation and redemption on ETFs or ETPs, technically, that's obviously a way to get liquidity for your crypto, and
Mhm.
now with these Bitcoin backed loans. So, again, this is what financial markets are about, which is, providing liquidity, creating liquidity. I don't know if it's like, in a lot of ways, though, these kind of undermine like the utility of crypto to begin with, right? Which is like, well, if
Well,
it's so
I think
great, if it's so great of an investment, why do you need to like sort of wrap it in these like traditional,
I mean, but that's the
like you're
nature of.
putting traditional finance wrappers around something that was supposed to bypass all of it, but
It seems like
irony is
that's the
lost
nature,
along
though,
the way.
of finance today. Is I mean, and these are part of the financial system. You have to, kind of recognize that. I mean, so I would say, that other article we were talking about, the BlackRock article, kind of. I mean, it kind of goes in that
Let's
same
go there.
direction, right?
Okay,
The
so
one.
for folks who missed it, yeah, let me fill you in, and then I'll
Okay, yeah, yeah,
let me fill folks in, and then I'll let you take it from there. So,
sure,
BlackRock is now going to offer their BIDL, their treasury backed, right? So this is a tokenized money market fund,
right,
available only to institutional investors, but that is now going to be available for trading on Uniswap. We all know Uniswap, right? The probably I think is the biggest, maybe Hyperliquid now, but a
yeah,
leading DeFi exchange, Jimmy. And as part of the deal, BlackRock is also buying an undisclosed amount of the Uni token, Uniswap's
right.
governance token. So talk about how big a deal this is.
Yeah, I mean, this is a big deal. I mean, this is the largest asset manager in the world. Is basically getting into not getting into DeFi. I think they've probably already been in DeFi to some extent, but facilitating, DeFi with their, kind of one of their star investments right now, Biddle. And certainly, the largest tokenized money market fund that's
Hmm.
out there. The fact that they're doing that, they're doing it with a large partner, Uniswap, which is
Yeah.
fairly huge. And the other thing I think that's interesting, this is just for institutional investors. This isn't for retail. Retail don't get to play in this
Not
field.
right now, at least.
Yeah, well, not right
Yeah.
now, but I think it's interesting because most things, and you and I have talked about it. We talked about it at the conference. The fact that this has been, driven initially by retail in a really big way, but here we have a new venture that it can't even involve retail, and yet, the world's largest asset manager is jumping in this way. Not only are they jumping in to offer, but they're also, taking basically an interest in Uniswap by buying the Uni tokens.
For sure. This is significant. I think anytime BlackRock does something, we need to take notice, and not just words, right? Because, Larry Fink talks a lot and says a lot of things, but,
Right.
This is action, right? This is action. I go back, I also teach a class on climate finance, and Larry Fink was a big leader there. He doesn't talk about that anymore, right?
No.
So, actions speak louder than words. And here's an action. It is interesting. It's a partnership with with Securitize. I think folks have heard of Securitize, their leading tokenization platform. Whitelisted wallets only, so you do have to sort of be pre-approved to do this. It's going to be traded on Uniswap X, which I think is a different. My understanding is it's a different platform than the main Uniswap DEX. So it's actually a request for quote platform, Jimmie, which I think you're probably more familiar with how those sort of systems work than I do. And so again, like with a lot of these things we talk about, is this, the question is this a harbinger of things to come? Okay, initially institutional, but eventually you'll be able to, retail will have access to tokenize real world assets on, self-custody, decentralized exchanges.
Yep.
And so I think that's what we're going to be looking for going forward. Back to some of the panels at Digital Assets at Duke, there's some clear regulatory hurdles that need to be worked out. Obviously, BlackRock is not going to be okay with, terrorists and like other bad actors, right? So like there's got to be some. That's just the reality. And I know there's a lot of, degens out there who, are saying, look, let people do what they want to do. DeFi is, decentralized, and that means, no compliance. That's just not going to fly with a firm like BlackRock, folks. Sorry, hate to break it to you, right?
Yeah, I think this takes it to. So I mean, it's a good point. I think it does take it to a different level. Not only is it institutional, but it is the world's largest asset manager. They're not going to go into this with any sort of I would say any uncertainty. There is a lot of certainty around what they do.
Yes.
They got big, and they stay big because they are they are who they are, and they do their homework on these things. But I did think it was really interesting that a project like this was getting off, only offered to institutional investors initially, and that it's being that they are moving forward by also taking this other investment in Uniswap. I mean, this is how intertwined we are starting to see traditional finance and DeFi, crypto. I mean, this is why I say it's already part of the financial system. People are like, well, will it be someday? We just talked about, it's the 5th largest buyer of Treasuries in the world, right?
Yeah.
We are seeing the largest asset manager basically, working with one of the largest DeFi platforms in the world. I mean, folks, it's here and it's not going anywhere. I mean, if people think this is going away, it's not going to. It would almost be impossible to turn back the clock. And for so many reasons, but we're seeing this this interconnectedness that would be almost impossible to reverse or to break up.
Well, you're right, 100%. We're seeing the interconnectionness, and we're also seeing, I think, kind of a for the longest time, Jimmie, amongst the crypto skeptics, one of the lines you would hear is, well, crypto doesn't have much utility, but blockchain does, right?
Yeah.
Look, the reason that this has become such a big industry and has attracted so many people is, let's face it, prices, right? Token prices, and speculation. But now I think we are actually seeing that kind of narrative become fulfilled, right? Which is, look, we're talking about a money market fund, right? From in finance, I mean, this is sort of as traditional as it gets here, but running on blockchain rails, right? Going on chain. And again, we have another example of, the uni token, right? I mean, my gosh, you would think that a firm like BlackRock announcing that they were going to invest in the uni token would really bump the price up, and it did, but it came right back.
It
So there
came
was
right
no,
back.
it came right back. And so again, the story is not about tokens and token prices, right? That is, that ship has sailed. I'm sorry. I know a lot of
Yeah,
folks out there care a lot about that. They want to know, okay, which token should I invest in now? What's one's going to go to the moon, whatever. The market has moved on, folks, right?
absolutely.
The market has moved on from that. Now market players are saying, okay, what aspects of this technology and infrastructure are useful, to your point, efficiencies, right?
Yep.
Ease of use. That's where things are heading, and that's where things are at now. So I know, you're seeing a lot of kind of disappointment on crypto Twitter. People are, kind of some. It's funny because some people are lamenting, missing Gary Gensler, right? Because
Yeah.
prices were up. Like what? Look what happened to our crypto prices once Gensler left, right? Wall Street's doing what Wall Street does, man.
Oh, yeah.
They're taking the parts that
They're
they're
not going
taking
to
the
be
parts that
marginalized. Wall
they're
Street is
taking the
not going to
parts
be
that are
marginalized.
useful. They're taking the parts that are useful and discarding all the rest. So fascinating. We'll keep an eye on that. Jimmie, another
I
story
think
that
we
I know.
have to,
Yeah,
so the other thing on that, is, and I know we're going to talk about it in a second, but the fact that stable coins are becoming so entrenched in
margin.
finance,
Yes.
margin lending, their collateral. We just saw it. Their collateral for basically a loan package product.
Yeah.
An ABS at the end. At the end of the day, we're seeing this kind of this kind of intertwining of finance, traditional finance and DeFi, or the digital asset finance. I think digital asset finance is more descriptive than DeFi, honestly. But we're starting to see more and more of these kinds of things. And so, the CFTC came out with a no
Mm-hmm.
action letter on margin lending. But I'm seeing,
With stable coins as collateral.
as stablecoins as collateral. I'm seeing that across the board. People talking about stablecoins as collateral for different kinds of loans at very traditional financial institutions. And I'm thinking that before the end of the year, we're going to see a state bank regulator come out and say, maybe we need to rethink the way that we're treating stablecoins in as far as tier one capital. And the reason is the reason that money market funds aren't treated like treasuries, and as far as and it sounds boring, folks, but this makes a huge, huge, huge difference to banks. The reason that money market funds aren't is because they're representative of an asset. But I would say it's not because they're representative of an asset, but because there's also a time issue. If I want to sell treasuries, if I own treasuries and I'm a bank, I can sell treasuries in a heartbeat, right? I can sell $1 billion of treasuries in a second, and it wouldn't even be a blip. Money market funds are a different story. They are a mutual fund. You have to wait to the end of the day to pricing and all this kind of stuff, right? You can't get your money back right away. Tokenized stablecoins are a different story. Tokenized stablecoins, you can get your money right away, right? You can liquidate those almost immediately.
Maybe.
We haven't run into a situation where you couldn't. Could there be a problem someday? Maybe. I don't think so, because it's such a
Depends
deep
on who
market.
you are. Depends on who you are, Jimmie.
Huh?
Because right now, it depends on who you are. Depends on who you are. Because right now, right, if you and I hold USDC,
Yeah.
right, we cannot go to Circle and say, "Hey, give us dollars back." We do not have that legal right. If we want liquidity, we have to sell it on an exchange. You go to Coinbase.
Yeah.
And so you're counting on the market, valuing that stable coin, right, at $1.
Right.
Okay. But the reality is that there's not a single stable coin in existence that has maintained its peg, right? Obviously, Circle had the notable SVB incident, right, where it went below 90 cents because they had $3 billion in uninsured deposits at SVB, and the government bailed that out, and we've lamented that at the time and still lament that. But so there's no guarantee.
Well, I know
for anyone out there that $1 is.
The government had to step in and do the same thing with U.S. Treasuries, right? They had to guarantee that 100 cents on the dollar.
Well, there's a whole, a lot of people are chattering now about
that should be a story everybody tells in every business class going forward.
Well, back to your earlier point about stablecoins, Jimmie, now that there's such large holders of U.S. Treasuries, does that sort of guarantee that sector, and does that provide an implicit backstop, right? If there were to be a run on a stablecoin issuer,
Yeah.
if it was a large one, would the federal government bail them out for fear that they would liquidate their treasuries and send yields spiking?
Interesting question. I
I think we know the answer to
I
that
don't
question.
know. I mean,
There'll be a bailout. Absolutely. That's what we do in this country.
we do
bail
bail
out.
out. We do bailouts well.
Yeah.
Unfortunately, we do bailouts
Yeah.
really well. But I think that we're, what I see here is we're seeing, more and more this becoming, these stable coins in particular, being more and more entrenched in financial institutions, in lending platforms. But some of the lending platforms are banks themselves, are brokerage firms themselves. I mean, they're using this for margin lending. That's that's how you buy assets, right? That's how you leverage things. And so the fact that the CFTC has the no action letter, but we're seeing it in other realms, I do think that they are going to reconsider how. I mean, I would be very surprised if we don't have at least one state reconsider how, for state charter banks, how they're considered.
Good point. I mean, I think the specific issue that you're raising is less on the capital treatment, but more on the liquidity treatment. So for high quality,
well, it's yeah. I mean, it's one.
The liquidity coverage ratio,
right.
Mandates that banks hold what we call a certain amount of high quality liquid assets to cover a 30-day stress outflow. And so if a bank holds stable coins, okay, what does that mean
qualify?
Does that qualify as HQLA? I don't know if regulators have weighed in on that yet.
I wonder if we could get.
That's a good question. Someone could. I'm sure Katie Boskin or
I was going to say. I wonder if we could get Katie on to talk about that.
Yeah, we should look into this. All right, Jimmie, I want to end though on a story and just get your thoughts on this because I think we're going to come back to this. I definitely think this is going to be a theme in the year ahead. It got brought up a little bit throughout the conference, but it's really just taken hold, especially with this whole Claude thing or whatever, Moltbook situation, which is AI agents, right? And one of the things about the crypto industry, back to pumping token prices, is how do you pump? Well, you create a compelling narrative, a story, right? Robert Shiller, the great economist, right? He talks about narrative economics, right? How do you create a bubble? You have a compelling story. Or human beings are, back to Kahneman and Tversky, right? We tell, we understand our place in the world and how the world works through stories, right?
Yep.
And so one of the new narratives emerging is
sideline. Bob Shiller has to be one of the most underappreciated economists. I mean, in the big scheme of things, for economic.
He created perps, by the way. Everyone's talking about perps. He created perps. He basically came up with the concept.
Index, folks, that prices everything.
Yeah, for sure.
That's that Shiller.
That's Shiller.
I think he's underappreciated.
I think I'll agree with you on that one. So anyway, Jimmie, the role of AI agents and stablecoins, and I think stablecoins with crypto in general, right? So everyone's talking about AI agents, right? Sort of autonomous bots that that sort of we kind of give, we give them some instructions to, and then we release them into the wild, and they they
go out and do stuff. Yeah.
They go out and do stuff. Yeah, basically. That's the best way to put it. They go out and do stuff. And right now, their functionality is fairly limited. There's a big story the other week that, now there's this kind of Reddit forum for bots.
Yep.
Or for AI agents.
I was on it last night.
Oh, you were on Cloudbot? Yeah. Okay. My understanding is that human beings can also post there too, so not everything you're seeing is
people definitely post
is AI. So anyway, okay, so what's the direction of travel here? Are we going to start seeing AI agents given crypto wallets or have wallets embedded into them and just start transacting on our behalf, right?
I think we've already seen companies saying they're going to do that, right?
Yeah, and so specifically the story is Coinbase, right? So Coinbase has rolled out agentic wallets. Okay, it's the name of the product. It's the first wallet infrastructure designed specifically for autonomous AI agents. It will allow agents to independently hold funds, send payments, trade tokens, earn yield, transact on chain. Okay. And they're using a new protocol X402 that Coinbase is working with other internet stakeholders. I mean, you're going to need a protocol to do this.
Right.
This is something that I'm going to spend more time trying to wrap my head around going forward. Part of the issue with AI is moving so freaking fast, Jimmie. And when you teach and you have small children like I do, it's just carving out time to just okay, I got to study this and get my head around this is challenging.
I mean, we've been doing
What
this.
do you think, though?
So,
AI agents with wallets. Is this going to be a thing?
I mean, we kind of already we have it already in traditional finance. We just don't call it that. So, I mean, if you look at a lot of high frequency trading firms, folks, that's how they work. We don't call them AI agents. We call them machine learning, models. But they operate, independent of people, right? People can't move that fast. People can't trade in sub-second, type. So when we look at that, this has already been in existence for traditional liquid assets. And so we already know how this story ends. I mean, now there is a big concentration of those firms, right? There's not like a million of them out there, right? There are a handful. However, there are a handful of big firms. There are a lot of smaller ones. I was talking, or I was reading Christina Chi, who runs Data Bento. Some people might know her, some people might not. She's a huge supporter of the fintech program at Duke. So she speaks to the students every year. She just had announced her 10,000th customer. What they do is they provide market data for high frequency trading firms. They provide market data at the speed that they need. 10,000 customers. And so that's how many people are out there doing it. We hear about the really big guys, but there are a lot of small guys out there who are trading for their own accounts and things like that are doing this kind of thing. And so I would say we already have this with traditional assets, mostly equities, because equities trade really fast. But they're certainly creeping into other asset classes. So the fact that this is being done and they're hailing it, I mean, yeah, it's a big deal, but I mean, we know how the story ends. I mean, it's already out there. How
does it end?
I mean, it proliferates. It will proliferate. Absolutely.
Okay.
I mean, well, if you compare equity markets today to say,
when you say it proliferates, like, I mean, that would mean that we would need every person to, develop their own agent and give it a wallet, or like, will agents spawn new agents, right? Like, it's so futuristic.
Well, I know, but
I mean, DeFi, like with DeFi, the whole, like, for the longest time, we've been talking about DeFi in the sense, like, okay, is there just gonna be like a parallel financial system? And like, what was interesting about the BlackRock story, which is like, no, actually, like, it's going to be one and the same. But now with the agent story, I'm kind of thinking, well, like, maybe sort of DeFi will just sort of be this, like, this virtual environment where it's just like bots just
we have
just trading with one another.
Stock trading now.
Yeah, but it's like, but they're trading tokens. They're just gonna be trading tokens. It's like, like, I guess you could just tell your agent, like, hey man, like, go yield farm for me, and I'll check in a few days.
I think we're already here. We're doing it in stocks. We got to talk about it next week. I'll get some.
All right, brother.
Articles for you.
This story ain't going away. So we're gonna cover it. And let's say, look, a lot of fun. Congrats on the conference. Always a pleasure working with you on that, Jimmie.
Great to partner with Lee. I could not ask for a better partner to work with on the conference. Man. I really couldn't.
I feel the same way.
Without you, it wouldn't happen. And of course, Nikki
without us, it wouldn't happen. Without us, and of course, Nikki Bass. So,
and of course, Nikki Bass.
Great teamwork. All right, brother. Have a great weekend.
You do the same. Thanks.